to the Scaling Japan podcast, a podcast about how to grow your business from $100,000 and beyond in the land of the rising sun.
Welcome to the Scaling Japan podcast. I'm your host, Tyson Batino. I wanted to apologize in advance for the audio for my voice in the upcoming episode. It is quite low because I had a cold, but I hope you enjoy the content and I hope to continue producing more great episodes for you. And on today's show, we have Nalin Advani. Nalin is the co-founder of Entomo. He is also a very well-known investor and entrepreneur in Japan and Asia. He has worked for Fortune 500 corporations and has scaled multiple businesses in Japan and Asia. He also serves on the board of directors of multiple large corporations, and several of the companies he has invested in have completed an IPO. I have wanted to get Nalin on the podcast since the moment I first met him, which was on the Monday night's Business in Japan Clubhouse chats, which we'll link in the description. And I really look forward to him providing some insights on IPOs in Japan. So it's so great to have you on the podcast, Nalin. And could you share anything else about yourself?
Thanks for having me here, Tyson. And thanks for being on the Clubhouse as well. Yeah, I'm looking forward to our conversation. I know a little bit about your background. And again, hats off to you for putting the time and effort in to make this podcast happen. A little bit about me. I was born and raised in Japan. I'm of Indian heritage and origin. I currently live in Yokohama, Japan, as well as Singapore. And I come and go between the two places. I consider myself Asian, and I love technology. I love working with early stage companies, founders, to try and find ways to scale their businesses and to apply technology to solve problems, because I think that's what technology is here for.
And you are a legend in the foreign startup community. When I mentioned that you're going to come on the podcast, a lot of startup founders okay, I definitely got to listen to that.
Thank you for that. I mean, I certainly am not a legend. I just, I love technology. I love working with ideas, and I love impact, whether we're impacting supply chains or in healthcare or, automation or whatever it is. I think technology, if it's applied well, can make our lives better. And I enjoy being part of that process of taking an idea and doing something good with it.
Yeah, I really appreciate your contributions to the startup community of Japan, and also especially the foreign community. And actually, there's not too many foreigners who have kind of experience, with the IPO or, seeing it go through. But what has been your experience with the whole IPO process in Japan?
Fortunately, I've been, an early stage investor. So I have about 20 companies I've invested in over various stages of my life and career. But my first investment in a Japanese company, this investment happened in 1998. It was in a domain that I understand very well, which is, back then we called it embedded systems. These days we call it IoT. It's basically the software and the intelligence that goes into making things connected and more effective, more efficient, and better. So it was a company that we call ESOL, that's ESOL. I invested in this company, and then I also took a board seat, and then I eventually became the chief marketing officer of the company. It started out as a services company, and I was like, services companies can't scale so well, and then you have services companies coming in from other countries that can offer services at better rates. Let's turn this into a technology company. So we actually turned the whole company into a product licensing company. It licensed the software, and then it upsold services. This company eventually scaled and did an IPO. It took a long time. It did an IPO in 2018. I stayed on as a board member till I think 2006. Since you asked, Tyson, we had options back then where it was not just the Tokyo Stock Exchange, but we had JASDAQ, and I believe we had Mothers as options. But I think, the founding CEO was very keen to get listed on the Tokyo Stock Exchange. I think it was a little bit of the brand power, the credibility that comes with being listed on the TSE. I'm proud to say that it did take a long time, but ESOL did get listed. It went IPO 2018 on TSE, and now it's a member of the Tokyo Stock Exchange Prime.
Very impressive.
And I'm very proud of what the company does, because its software is helping. It runs cars, it runs GPS systems, it runs printers, it even runs fax machines. And it's great. It's good to see. I feel very proud being able to see a machine or a device and say, you know what? It's my software that's in there.
Wow, that's very cool. Yep, powering up fax machines is establishing, or it's helping maintain the communication infrastructure of Japan.
Yeah, it's I think fax machines are a tiny part of the business. The biggest, obviously for ESOL, the biggest chunk of the business comes from the automotive industry, because most of us probably know this, but there's a ton of intelligence built into cars, and it requires software to power most of that. So ESOL is definitely focused on the automotive industry.
That is very cool. And I think you mentioned like a couple of the possibilities for IPO, like, Tokyo Stock Exchange, others. And we'll go into more detail later. I also wanted you to give you a chance. Like, I know you advise quite a few companies, but how do you help companies?
Okay. For me, usually it's first the founders. So if there's a founder who I'm fortunate enough to meet and our conversation clicks and I like the ideas, or I'm able to contribute to shaping the ideas, our conversations just continue. In many cases, I end up becoming an angel investor in the company. In some cases, I also take sweat equity. In other words, I get very involved. I can think of a few companies. Maybe I shouldn't be naming them right now, but the founders who are listening to us speak right now, that you probably recognize this, put in anywhere from 1 hour a week to, at a later stage, maybe 1 hour a quarter. But we will spend time, we will structure. We will look at things like how to raise money. We will look at things like how to take the product or the idea to fruition and to market. A big one is team, right? How to build a team, who to look for, when to hire them, what's the prioritization. One of the things about startups is we are all very resource constrained. And a big differentiation in terms of our ability to succeed is how we choose to apply our resources. So I'm there with the founders, thinking that through and helping them figure out which market do we go in first. If we have more than one technology, which one do we productize first? If we have a market segment, what are the top 3 market segments we want to go into? Where would we have a competitive advantage? And so it's a lot of this ideation and a little bit of sparring with the founder to figure out where we should go. In a sense, I'm an early investor, but I'm also in some cases a co-founder. Maybe not taking a super active day-to-day role, but definitely by sparring with the founder, helping shape the offering and helping shape the company. So to your question, Tyson, how do I get involved with companies? I certainly get involved first with the founders, and then through the conversations, eventually to the company.
Yeah, I think that's so important, especially for, I would say, even second time and third time founders, but for first time founders, like bringing someone like you on the team saves so much time from learning from trial and error. And when you're doing something novel and new, you really don't have the time to just continuously make mistakes that take several months to recover from. And it's all about speed. So that's really cool.
Yeah, time is getting compressed. And so our ability, meaning, startups and the startup community, of course, we have to learn from our failures. And I know this is a cliche, but if you've got to fail, you have to fail fast and then recover and move on, right? Failure is part of the learning process, but it's accelerating. And if there's ways to limit the impact of failure, or if there's ways to fail more quickly, learn and move on, I certainly want to be applying those. And I suppose because I've done this a few times, I'm able to help that process of accelerating the failure and then accelerating the ability to bounce back, adapt, react.
I think there's a lot of wisdom, I'll say, compacted into that. I agree 100%. So kind of going back to the IPO, I'll start with the basic question, but what exactly is an IPO?
Okay, so I'm very opinionated on this. To me, an IPO is an initial public offering. So it's the first time you're offering your shares to the public. Until your IPO, you're offering your shares to a more limited set of people, your investors, perhaps investors as in institutional investors, basically venture capital. Earlier on, you're offering your shares to your friends and family and angels like myself. But an IPO is the process of making your shares available to people that, in a sense, you do not have the ability to choose who they are, because now your shares are available publicly on a market, on an exchange. And anybody, in theory, as long as they're not breaking other laws, can come in and acquire or sell the shares that you've now put up for offer. So to me, an initial public offering, an IPO, is a way to raise more money. And you've earned the credibility to raise more money because you've shown time and time again through transparency, through success, through the fact that you may have failed and learned from the failures, but you now have earned the credibility to offer your shares to the public. What you do as a result is you can raise more money. You can raise money at a higher valuation for your company. And this is where, my opinions might differ from others. To me, an IPO is generally not an exit for the founders, especially. And, I'm a traditionalist here. Yeah, in some cases, the founders can, sell some of their shares, even in some cases, completely exit the company. But the company has to go on. And the process of an IPO is basically to raise money to go do something more effective, more meaningful, more powerful, more impactful than you could have done before you offered your shares to the public. It's a way to raise money. And then this is where, again, I feel a bit disappointed sometimes to see that companies do an IPO and they see that as an exit. You do see some companies where this happened in Japan. You see it a lot where the company lists. And then when you look at their share price over 1 year, 3 years, 5 years from when they're listing, it goes down. It's a downward slide from the top left to the bottom right. And that's disappointing, right? What you want to do is raise money, go do some more great stuff with that money, and hopefully return more value to the people who bought your shares once you went public.
Thank you for listening to this episode of Scaling Japan. In addition to serving as your fine host, I also provide advisory and coaching services to business owners who want to 2x, 5x, and even 10x their business. So stop holding your company and your team and your employees back, and let me help you and your company scale. Find more information at scalingyourcompany.com. Now back to the episode. I thought that was a perfect explanation of it. And that was actually one of the misconceptions I had about the IPO when we were going through the real scaling phase is, would an IPO be beneficial or not? I did come to it with the impression that it was like my sayonara moment, but no, like how you described it. You have the public, they're investing in your company because they want to see it grow and to provide returns in the future. And if your company has a plan, like this is what you want to use the funds for to achieve your bigger mission, that's how you can return the investment for the people who've putting their faith and, more importantly, their money in you.
Absolutely. It's a different audience, right? Having said that, founders typically, I can think of a few, even foreign founders in Japan. There's a few I have immense respect for. I'm not sure if I should be naming them here, but I'm going to name one person who I'm very fond of and have respect for, which is Paul Chapman. He's the founder and CEO of Money Tree. He's on that Monday Clubhouse that I'm on very often. And he says it really well, which is, we're smart, talented folks, and we can go out and go work for a company and make a lot of money. But as founders, we've chosen to do something that, play a longer game. And usually that means we earn less. And we also deserve to be rewarded for making these sacrifices, whether it's time with family, whether it's taking, less salary and so on. So I think a founder is warranted in selling his shares or her shares when the company goes public. Not all of them. And anyway, you are bound by insider policies and systems. So you can't just dump your shares and move on. But I think founders should be rewarded for the sacrifices they've made. And they should be allowed and they should be welcomed to exit part of their holding. But it's important to note that the founders are usually a key part of the company and a key reason why the company was able to go public in the first place. So there's a balance between some amount of exit and some amount of taking the public's money and doing more good with it.
I also agree with that as well, because by the time you've listed your company, you've worked in your company for 5 years, 10 years, some cases 20 years. In return for all the sacrifice and, let's say, giving up that stability, you would like a little bit of a retirement fund.
I mean, I'm just speaking now from my own point of view. With ESOL, while I'm not a founder of ESOL, I'm in Japanese, Nazuke no Oya, the person who named it. So I took the company from being a services company to being a product company. I earned the right, I suppose, to rename it. And so I see myself as partially kind of a founder here. And, I stayed on as a shareholder all the way through the IPO. After the IPO, what I did was I did partially sell my holding and kept part of the money in the company. But what I did with the money I earned as a result of my partial exit was I reinvested it in other companies. And so this is something I welcome. And anybody who's listening, if you're fortunate enough to get an IPO, certainly reward yourself and your family for the sacrifices you've done, but also perhaps find an opportunity to pay it forward. Invest in more companies and mentor more founders, because what you've learned is certainly going to be helping more people go through the path you've gone through as well.
Yeah, it just creates a positive loop and cycle where the amount of money being reinvested, but also the knowledge and experience, which then influences future founders, which raises their skills and abilities. And it just has this really positive cycle that it starts to develop. And so there's multiple stock exchanges in Japan, but could you go a little bit into some of what's available?
Right. So, I mean, originally you had the Tokyo Stock, and you actually had Osaka as well, which I'm not too knowledgeable about, but you had the TSE, Tokyo Stock Exchange, Tokyo Tosho, what we call Tosho, and that used to have the first and second divisions. I'm not sure of the criteria really between the first and second, but basically big companies and bigger companies. Right? And then later on, I think the TSE looked at what happened in the US with NASDAQ. Right? In the US, you have the New York Stock Exchange, then you had NASDAQ, and NASDAQ was geared more towards growth companies. The criteria to list on NASDAQ was a little bit, I don't want to use the word easier, but the criteria was different. And I think as a result, Japan then came up with something called the JASDAQ. The name also points to the fact that they were very, very conscious of the NASDAQ. And then they added another exchange called Mothers. And the idea of Mothers was, I think the company didn't even have to be profitable to list on Mothers. So you had these three different blocks, the TSE, the JASDAQ, and then Mothers. Recently, all these have been pooled under one umbrella, the JPX. And within that, they've kind of redistributed where you could fit in. So right now, the TSE has three sections: the Prime section, the Standard, and the Growth section. Biproji, which used to be called Nihon Unisys, where I'm on the board. It's a large Japanese systems integrator. This is on the Prime exchange. The Prime has about just short of 2,000 companies on the Prime exchange. On the Standard, there's about 1,000 companies. And then on the Growth, there's around 500, if I remember correctly. Growth is, I think they've captured the spirit of the Mothers Exchange. So basically small companies who may or may not be profitable, but show the potential of growth, show the potential of being able to scale quickly and be disruptive. Typically, those are the ones who go on the Growth Exchange. I think for them, it's very clear they're raising money by going public, because that's a better option than raising money from venture capital. I think in the case of Standard and Prime, companies would get listed here or get moved there based on their credibility, their scale, size, and stability. So I think, Prime Exchange, we typically don't expect companies to grow there at double every year or something. But definitely if you're on the Prime Exchange, you pay a dividend, whether it's 50 yen a share or 5,000 yen a share, you're paying a solid dividend every year quite predictably. Whereas on the Growth, you're not expected to pay dividends, but you're expected to hopefully scale the company and eventually perhaps even enter the standard or the prime exchanges. I hope I've given a little bit of clarity to this, Tyson.
No, you provided a very great summary of it. I think from others, they might have like a growth rate requirement. I don't remember the exact details as well. But no, I thought that was an excellent summary.
I don't think there's like many things in Japan, I think there will be guidelines, but there's not like a hard and fast rule.
Yeah, like there's not like it must absolutely, but there's kind of a guideline for the growth or the potential.
Yes.
So I'm kind of curious, like, if someone were to launch an IPO, but what are some of the things that would change for a company and its founders after a successful IPO?
Well, so if it's a successful IPO, of course, the founders will have a much higher net worth for sure. If they sell their shares, then they have to also remember to be mindful of any insider obligations they hold. They will have to pay a tax on capital gains. But I suppose those are more, personal and private issues. The changes that would impact their business is their reporting obligations, right? Now that you're public, you're open to and you deserve to be scrutinized by the public. Even in the process leading up to an IPO, you've got to make sure you're doing the right thing. Your numbers stand up to the scrutiny. Because in general, again, I'm a bit of a traditionalist, but the idea of doing an IPO is you're going to do better and more with the public's money. And people have placed their trust in you with their money. And so you have to quarterly announcements, monthly board meetings. The board meetings have to be minuted. You have to react to any changes in the environment, whether they're regulatory or otherwise. How you go about governance of the company will change. And as a founder, sometimes you might be very used to making decisions based on your instinct, based on your competences. But when you go public, you will usually have outside board members like myself, and you will have to be able to justify decisions you're making as a manager day to day to your outside board members. Strictly speaking, you're also handing over executive nominations to the nominations committee of the board. Before you're public, you get to, in many ways, in many cases, you as a founder or your board and your investors are the people who get to choose and who have to choose who get leadership positions and who has what responsibility in the company. When you're public, you are opening that up to a broader audience. The broad audience is represented by the board, including the outside board members. You have obligations to the public, and you need to meet those obligations.
Also, on the other hand, I think when it comes to IPO, you can also fail and not raise enough money or capture enough attention.
That's a good point, Tyson. And, I'm not a very big fan of the concept of a SPAC. And unfortunately, Japan didn't really embrace it. But I have seen SPACs being done in the US and other countries. It's not an ideal way to get listed. I mean, if your company can withstand the scrutiny of an exchange, you should be able to get listed without having to use these complex devices like a SPAC. And as you see, most of the SPAC listings that have happened on the US exchanges, I don't think most of them have performed very well for that exact reason.
Yeah, I think a lot of them have experienced the amount that they initially was offered versus the current value. There has been some destruction in value there.
Yeah, and I mean, to me, that's only fair, right? I mean, it's basically the markets have a way of balancing things out. And if the company was overvalued in the first place, the market has a way of telling us that over time.
Have you ever found yourself having trouble creating a business plan? Do you pretty much operate on a day-to-day or week-to-week basis, creating confusion and chaos in your organization? If that sounds like you, I recommend you join my Entrepreneur Bootcamp. In my bootcamp, you will set an achievable but challenging revenue target for the current or following fiscal year, and we will create a business plan to make it a reality. See more in the show notes below. And now back to our episode. I would not want to be in that position of failing an IPO. So I was actually surprised how complex and long the process is of an IPO, but could you share a little bit about the general timeline?
It can differ, I think. But you have a jumbishitsu, basically a team of people who are brought in to prepare you. If you are VC backed, in most cases, you are. And the newer companies, in the case of ESOL, where I was, we weren't VC backed. We were self-funded and cash flow positive. But later the banks came in. Whether it's a VC or a bank, they have teams that are going to help you through that process. And so having frequent and open conversations with whether it's the bank or the VC is very important. You will eventually have to choose a lead who's going to help you with the process of listing. And it's not necessarily your main bank, but it is going to be a bank who's going to lead that whole process. And frequent communications with your jumbishitsu, your listing preparatory team, committee, and the bank is very important. There will be scrutiny. You will have to bring in, typically one of the big four audit firms will come in and start, and it doesn't have to be one of the big four, but the equivalent of the big four will come in. They will start scrutinizing generally your income statements, your P&L, as a result, your balance sheet, and all that. They will help you clean it up if there's anything there that just the accounting principles may not have been done cleanly or properly. Ideally, you would have at this point had a CFO who really understands this process, and that person would work very closely with the banks to get everything together, right? You also then have to think about the constitution of your board, who's on your board, who lends credibility to the persona of your company, and then you file your paperwork with the exchange. There's a process where your lead bank is going to basically float the listing out. And it doesn't necessarily happen that you list on the day you plan to list, because essentially they will run some numbers and see if the market agrees with those numbers. And the market may not necessarily agree, in which case the listing doesn't happen on that day. You might also be forced to revisit the numbers. The numbers means the valuation of the company, and therefore, you can work backwards from the valuation to how many shares you're putting in the market and what that per share price might look like. So there's going to be a little bit of fine tuning on what that number might end up looking like. But that's broadly speaking the processes. In terms of the people, you need a good CFO, right? You need a good board who's going to support you. You need a good audit firm, and you need a bank that works closely with you for the listing process. I hope I answered, broadly the question you're asking.
Yeah, you answered my question and some of the follow-up questions I've had. So I think for me, the realization was it's not like you just do the offering and let's say money comes to you. I mean, you have to get the banks, you have to do a road show, getting the people to really bring that initial momentum in capital. And let's say if they have trust and they have faith in your ability, then, other public investors will start putting money in as well. Some things I think that would be useful for the listeners is maybe there's some people that are considering to do an IPO, let's say 3 years, 5 years from now. And or maybe could you elaborate more about like kind of the team needed or some of the preparations they could make at this moment to really get ready for the hard battle that's going to come in 2 or 4 years, like the scrutiny?
So yes, the CFO is really key. One thing that I've observed is, really identify who are going to be the public voices for the company. And usually it's the CEO and the CFO, and the roles, like who speaks about what. In many cases, the CEO will speak about, the technology, the business, and the customer, whereas the CFO will talk about the income statement, the P&L, and the comparative, like where we are today as opposed to last year, and where we think we're going to go, the projections and so on. In your prospectus, in that document that you will file, you will put out there, these statements will also be articulated. So again, you need to make sure that the CFO and the CEO are aligned and saying, sending the same message, right? And you don't want to be in a situation where people say, well, why do we have two different voices with two different messages? It's the same message with two voices, but with two different flavors, right? One addressing the markets, because don't forget, your customers are also conscious of the fact that you're going public. Right? If I'm a company that's considering going public, and my customers, first of all, they need to know that. And second of all, we need to consider the impact it has on it. And very often that's the CEO's role. That's not the CFO's role. Whereas the CFO's role is going to be, the markets, the public who might invest in the company, the investors, the existing investors, and so on. I think we often forget the customer. The customer is the one who got us where we were in the first place. And what impact do we have on his or her business when we go public?
Or is there any kind of like new compliances, I think like kind of like rules that they would have to comply with?
I mean,
Potential
compliance is
customers?
a good thing, right? I mean, usually by us going public, we would struggle to find a customer who doesn't like the fact that we're going public. Having said that, the fact that that customer is our customer could become public knowledge, and maybe they don't want that. If I'm supplying, key technology to an automotive company, and now I'm public, I'm now the CEO of the company, and I have a shareholders meeting. But technically, my shareholder has the right to ask me who my customer is. And technically, I have to say something about that. Now, my customer may not be happy, even if I don't directly say that customer's name. I mean, you can usually connect dots, right? So my customer may not necessarily be happy by the fact that they're my customer is now public knowledge.
Yeah,
Right?
especially gives them a competitive advantage too.
Exactly. So, I mean, there's these really subtle things that people sometimes overlook. This is one of them. Yeah, but certainly the credibility we get by becoming a public company usually will benefit our customer too.
So would you say would it be really helpful in actually getting bigger contracts, or would say have an impact on maybe increasing the sales lead flow?
I think the answer to both questions is generally yes, right? Companies who looked at a small little startup that says, will these guys be around 10 years from now? All of a sudden says, wow, okay, yeah, we can work with these guys. They're public. There's scrutiny. They're living to a code and a standard that the public has signed off on. Sure, we can buy from them. Whereas before you went public, there's no guarantee these guys are going to be around. So I can't build my technology or my business based on a solution from these guys. But now all of a sudden, because you've gotten public shareholding, you become a viable vendor to them. So on the customer side, yes. And then in terms of the pipeline, I think it's the same thing. Potential customers who were considering buying from you, but weren't sure because they were, your credibility was not as strong, or in their perception, your ability to stay in business for a long term was not guaranteed. Now they say, well, we'll happily buy from you. There will be a small component of customer, I suppose, who doesn't want to buy from a public company for the reason I gave earlier. But I still think that's tiny compared to all the other benefits in terms of both customer credibility and in terms of business pipeline. Yeah. And there's another one, like government contracts too. I mean, it depends on the business you're in. But if you are in a B2B business, and most of, a lot of what I do is B2B, but if you are in a B2B business and you potentially can work with governments, they're probably more likely to go with you because you're public for the same reason, right? And governments don't do things for 6 months and 18 months. They do things that have lasting impact, 10, 15, 20 years.
Gotcha. No, that makes perfect sense. And is there anything else you'd like to share with the listeners about IPO or IPOing in Japan? Or any other personal thoughts you have on IPOs that you haven't mentioned yet?
So I'll share two thoughts, right? One is an IPO is, to me, it's not an exit. It's a very important milestone. So to all founders, whether you ultimately do an IPO, get to do an IPO, or decide not to do one, I think it's a nice milestone to hold as a goal or somewhere in your mind, in your journey. So that's the first one. And the second one is, please do consider very carefully, if and when you get that possibility of doing one, the right and good thing for your existing shareholders and your future shareholders.
I think I was going to add one point of also, if you do plan to go for an IPO, like several years down the road, like really thinking about the current team. And if you were to get that influx of capital, is this really the team that could carry out and make do on those promises to increase shareholder returns?
So I'm going to take that as a question. And I'd say, again, you're raising money. And one of the things that raising money allows you to do is go out and hire people who are smarter than you. And that's a good situation to be in. If I can hire people who are smarter than me, before I went public, I couldn't afford them. Now I can afford them. And now that I afford them, they work hard. They will help contribute to increasing shareholder value. That's good for them. That's good for me. That's good for all the new shareholders in the company as well.
Also, just being around them and see how they operate will also elevate your frameworks or systems of thinking in how to run a company.
Absolutely. And again, the governance, right? Not just the managers of the company, not just the potential new CXOs that you can hire, but also by virtue of having, needing some independent board members and some management board members, you're opening yourself up to a different view of the world. And you're also opening yourself up to be viewed differently from the world. So all these things, I think, are generally a plus, but you just have to make very sure that is the path you want to take. And once you've taken that path, please make the most and the best of it.
Thank you so much for your time, Nalin. And I guess with the last part is, do you have any requests or any asks for the audience or anything you'd like to share about yourself?
Nothing specific other than, if you found this conversation interesting, then feel free to reach out to me. You can find me on LinkedIn. I do enjoy conversations with founders and prospective founders. So if you reach out to me, I promise I will try to respond and maybe start conversations with you as well.
And we will add a link to your LinkedIn profile in the show notes.
Sure.
Thank you so much, Nalin.
Thank you, Tyson. You take care. Have a good day.